Good afternoon, everybody. Thank you for joining us for our weekly webinar series here at A&D Mortgage. I'm Carl Holman, the communications manager here. Today's topic is helping real estate investors with Dscr loans. We'll go over the ground rules. I'll introduce our speaker, and then we'll just jump right in. Because we have a high volume of people, we've muted cameras and microphones. We'll ask you initially if you want to have us address any questions to use the Q&A function down at the bottom. Otherwise, reserve your questions towards the end of the webinar, and we'll try to open up microphones so that people don't talk over each other. And then if you can just turn off your cell phones so that you can take advantage of all the content we're going to be providing here, and we'll go ahead from there. So our speaker today is Mark Glazer. He did our first webinar a few weeks ago. He is our wholesale team manager for the East Coast with a long tenure in the industry, and he's also an expert, particularly with DSCR loans. So with that, I will turn it over to Mr. Glazer. Go ahead, Mark.
Welcome, everybody, to the DSCR ceremony and what we have available to you for the webinar. Basically, AD Mortgage also works with a hedge fund, which makes our DSCR loans possible through securitizations. So we're able to do them up to 80% loan to value. And we could, we're here to help you on all your investment loan needs with a minimum of 20% down. So what you're looking at there is we're letting you know that basically we're nationwide. And in some cases, if you're doing it as an investment business purpose loan, you're able to work in states that don't require licenses for business purpose investor loans. And if you look on there in pink are the majority of the places where you could lend, even if you're not licensed, you could do investor business purpose loans. The DSCR is one of the main ones that we do this under. Continuing on. So basically the DSCR loan, it gives you the ability to get more business. So how does that work? If you have investors who don't have tax returns that help them, that don't have bank statement availability to help them, that don't have profit and loss, we could do a debt service coverage loan, no income, no employment, no employer. So just to give you an idea of how that operates, what we're looking to do is you're just going to need to get a hold of the appraisal and a 1007 rent schedule. We take 100% of the 1007 rent schedule, and at 80% loan to value, if that equals the rent, equals the mortgage, you're good. At 75% loan to value, you don't even have to debt service anymore. So once again, even if the rent is less than the mortgage, you could still go ahead at a 75% loan to value. What is it good for? Well, you could have a borrower who is currently renting and do a DSCR loan. You could have a borrower who currently owns their primary residence and do a DSCR loan. If you're renting, you need to have owned a piece of property in the last 24 months, any kind of property. But if you haven't, there are even exceptions for people who are renting that are of a great distance away from the investment property to do a DSCR loan. You don't have to have a history of investment. You can be, of course, a foreign national, which is one of our mainstays. Our DSCR loans, you could do a no-income DSCR loan for a foreign national who lives abroad. And of course, for experienced investors, we could do multiple loans. I've seen us do 5, 7, 10 loans for one borrower. So once again, to reiterate, if you are currently renting, but you've owned a primary residence or owned real estate in the last 24 months, you're good. And there's exceptions, once again, for people of great distances. Also, if you're living abroad as a foreign national and you own a primary abroad, this works as well. So on the 1003, no income on your 1003, no employment, no employer. We don't even need you to mention leases on your 1003 because we're going off of the 1007 rent schedule at 100% along with the appraisal. And if it's less than 75% loan to value, no debt service is required. The rate's a little bit higher, but we would go with that. Now, as far as the programs go, up to 80% loan to value, up to 3 million without an exception. And then less than 55% loan to value and less, we could go over $1 million as in cash in hand. We offer a 40-year and 30-year fixed rates. There's no difference in pricing. So we pretty much stay with the fixed rates. Once again, no income, no employment, no employer. Cash out proceeds can be reserves. Your cash out can act as reserves. And once again, it's available on the foreign national program, and it's available domestic. And get this, we're doing condo hotels now at 70% loan to value. So an example of a loan scenario, we do 1 to 4 units on our DSCR loan. We could do them up to 80% loan to value. And again, no income on the 1003, no employment on the 1003, no employer. You don't even need the leases. So at 80%, the DSCR needs to equal rent equal mortgage. And at 75%, it doesn't even have to debt service, even 1 to 4 units. So another example, if you had somebody, your typical domestic borrower, US citizen, great credit score, tax returns don't work, bank statements don't work, P&Ls don't work, we could put them on an investor. Once again, DSCR is investment. And at a 75% loan to value or less, it doesn't even need the debt service. Cash out is at 75% loan to value on our DSCR loan. So as you see our matrix in front of you, that will tell you that we could do up to 80% to 1.5 million. And then you see the various scores all the way down to 599 with up to 70%. Now understand, when you're at the lower credit scores, you need to see if there were any credit events, bankruptcies, foreclosures, short sales, to determine whether or not we can maintain this matrix or an exception is needed. Also, condo hotels, as you see, minimum credit score of 680 at a 70% loan to value. Now we're doing internal reviews for the limited project reviews for condos at 70% investor. And we're doing them inside now. So the cash out, as I told you before, goes up to 75% loan to value with a 720 score. In the 700s, you're at the 70, all the way down to the 599. But once again, be careful if there's any credit events. So on the DSCR loan, just to recap, purchase, refinance are available, and cash out. Cash out counts as reserves. Once again, you could be currently renting if you've owned property in the past, or if you're a great distance away from the investor property. There's exceptions if you're currently renting. 80% loan to value purchase, 75% cash out. We do 1 to 4 units, multifamily, single family condos. Once again, on the 1003, no income, no employment, no employer, and no leases are required. And the final review, 80% loan to value. The rent must equal the mortgage or greater, and at 75, the DSCR less than 1 is fine. Doesn't have the debt service. So through our technology and the ability to do the uploads, we now have an appraisal center where you could order your appraisal in our website. We have our AD studio, where if you want to put together a nice DSCR flyer, go get your credentials in the AD studio, and you can put together a really nice flyer to send out to your borrowers. And of course, the brand new Quick Pricer, well, it's about a month old, that's operating in the front page of my website. You go to admortgage.com, don't log in, and the Quick Pricer is right there to give you pricing on everything, except if you have credit issues, then you want to talk to me about pricing. Okay, so Right now, we're at our question period. Does anybody have any questions on the DSCR program?
Hi, Mark. There's one over in the Q&A from Bridget. She's
Okay.
asking, is there any seasoning, how long they've owned the property, or refi?
So generally 6 months or less, they're going to go with the purchase price plus improvements. So that's how we would do it on on that type of a loan.
Okay. Candy has a question. Is this product for residential only, or can it be mixed use properties?
So mixed use properties are available on an exception basis. And generally they're done in our bridge department with a higher rate. But we would have to do it on the mixed use as an exception basis.
Okay. And then Asan, I'm going to put your microphone on. You've got a question.
Anybody else have any questions?
Yeah, there's somebody has their hand raised. I'm trying to get their mic
Let me see if I can.
turned on.
No, it does not work for owner occupied properties. No, we don't have that program.
Sorry for people who can't see the question. Oh, there is.
Okay. There's a condo hotel. A condo hotel basically is something on the order of the property was built as a hotel, and generally there's another building or a second building that is for residences. Condo hotel is you could occupy it as an investment property in the building where they're offering daily rentals.
So it has to be like just 1 unit or 1 to 4 unit, or it can be more than 4 units?
Well, no, a condo hotel is like a whatever, 5-story, 20-story, 30-story building condo hotel. If you're referring to 1 to 4 units, that doesn't have any relationship to a condo hotel.
Oh, so that's like a commercial building, like it could have 100 units in it.
Right. So if you have a 100-unit condo hotel, which are typical, let's say in Brickell Avenue, then you could do 70% loan to value with a minimum square footage we're looking for of 500 feet with a full kitchen.
Perfect. Thank you.
Okay. All right. Julie has a question over in the chat. If the selling agent is married to the investor buyer, can we do an investor loan for her?
No, sir. No, ma'am. We cannot. That's non-arm's length transactions, and generally those types of transactions, which is like a gift of equity, are reserved for primary residences.
All right, a few more questions. How does a first-time home buyer qualify for the program? That's from Timmy.
So if you're currently, let's say, living in New York, or living, let's say, on Brickell, New York, or Brickell, and you're buying something in Orlando on an exception basis, depending upon the circumstances, we would then consider doing it on a DSCR loan, but it has to have an exception for that.
Okay. Mike has a question. Available for Canadian citizens and residents investing in Arizona rental properties.
So the answer is, as long as we have to check to see if Arizona is on the list of investor business purpose loans, then we would then check to see whether you're licensed or not, or whether a license is needed in Arizona.
How does your construction program work for building PR on a piece of land?
We don't currently have a construction program.
Okay. Do we have commercial lending?
Currently, we're not doing wide commercial lending right now. It's more on a hard money basis for our commercial lending.
Okay. Richard's got a question. If all the documents are in, what are the closing times?
Generally, I'm quoting 35 days start to finish.
Okay. Somebody wants us to go back to explain basically how the DSCR is calculated and what we mean by when a loan doesn't need to have DSCR. Let me go back to that slide.
So pretty much how it operates is this. You're going to get an appraisal, and you're going to get a 1007 rent schedule from the appraiser. That 1007 rent schedule is going to quote you a market rent. So let's say your mortgage payment today is 2,500 and the 1007 rent schedule says the market rent is 2,700, then you're good to go to 80% loan to value. If your current PITI mortgage payment is 2,500, and when you get your 1007 rent schedule and it comes out that tells you the rent is 2,200, then we're going to be in the 75% LTV category where the debt service does not equal to the rent. The mortgage does not equal to the rent, the PITI HOA.
Greg, did that answer your question? You can just say yes.
I'm sorry, I have a question. What if the 207 comes back with much lower rent than expected?
75% loan to value. We go down to 0 on the debt service.
Oh, wow, great, thank you.
Okay.
Anybody else? Any other questions?
Still see any other hands raised. Oh, one more.
We got one more.
Is the gross income annualized? That's from Steve.
Okay, so again, there's no issue with gross income. It's all, there's no income on the 1003, no income, no employment, no employer. We take whatever the rent schedule 1007 says the market rent is, and we're comparing it to the PITI HOA on the 1003.
All right. And Greg was asking, you still need no income verification, even if the DSCR is less than 0, sorry, less than 1.
No income, no employment, no employer. Everything's going strictly off the appraisal and the 1007 rent schedule.
Okay. Rodney wants to ask about the state licensing. So let's go back to the slide. That should help if he's a late arrival. Just the states that we're licensed in.
Okay, so then what you're looking to do, if you're looking at it generally, give me one second, let me make this smaller. All right, so we have licenses are not required in the pink states. But again, what we're looking for is this in several states that are not listed on here. They're updated. You would go to admortgage.com/rates. You would put in AD mortgage for the code, pull up my Dscr rate sheet, and it will give you the current states that you don't need to be licensed in. I would go off of that. That's current. Any other questions?
Did you say the DP dollar has to be self-sourced?
Oh, now this doesn't have anything to do with your sourcing of down payment, closing costs, and reserves. The borrower must have 20% of their own money, the down payment money. So 20% down, let's call it $400,000 purchase. The borrower must demonstrate 20% down, the 80 grand, sourced and seasoned for 60 days. All down payment has to be sourced and seasoned for 60 days from your borrower. After you do that with the 20%, you're permitted to have gifts for closing costs and reserves.
And how much reserve is required?
3 months.
Okay, Steve has a question. Income question was related to how the DSCR ratio is calculated. Could you provide an example?
An example, really simple. If the appraisal's 1007 rent schedule, which you could see, it'll tell you, let's say $2,700 on the rent schedule. You take that number and then you go to your 1003 and look at the housing expense number and you make the comparison. That's simple. If the rent is higher than the mortgage or equal to it, you're at 1.0 or greater, you can go to 80. If you're less than that number, let's say if it's 2,500 is the mortgage payment and you have a $2,300 1007 rent schedule rent, then you're going at 75% less than 1.
Did that help, Steve?
Questions, anybody?
Yep. Okay. Steve's taking care of.
Okay. Anybody else have a question? So this is a great tool. So if you're trying to get into a real estate office, who the realtors currently have, I call them pet mortgage brokers, then you could say to them, look, I have a program. If you have investors, whereby you don't need income, employment, employer, 20% down gets you into a property just using the appraisal and the 1007 rent schedule, as long as you could source and season your down payment. It's a great tool. Anybody else with questions?
Credit requirements.
So as you saw on there, if you're doing a condo hotel, it's 680. Generally, when you're looking at the credit scores, mainly the mid 600s and up work really well. When you're under your mid 600 scores, you have to start checking to see whether there were any credit events. So we need to check that out. And that's going to be a one-on-one conversation with your account executive. Any other questions?
Yep. Fred has a question. Let me unmute him for a moment. Hi.
Go ahead.
Go ahead, Fred.
Fred, you have a question?
Yes, I was going to ask what the fee structure is, and is it lender paid only?
So we at A&D Mortgage, we best perform at borrower paid. We have an underwriting fee of $14.95, $85 tax service, and $11 flood. Borrower paid is where we work best.
Thank you.
You're welcome.
All right. Rodney's got a question. As a mortgage broker in California, how do we get paid?
So California is an interesting state. You need to be licensed in California to do both investor business purpose loans and to do primary and second homes. It's up to your office. Generally, we allow on investor loans up to 3% borrower paid.
Okay. Bridget's got a question about source and season down payment. Can it be one retirement income account, then transferred right before closing?
Sure. Remember, we count 70% of retirement funds.
Okay.
Now, the deposit money, you need to source and season as well. So whatever account they're using at that, you're going to need to get 2 months bank statements from anywhere you keep funds if you're going to be using other accounts for deposits. If you can also close this loan in an LLC, no extra charge for that. So it's an LLC with an operating agreement showing your borrower as the owner of the company, the member. We're also able to use business funds if you demonstrate 2 months bank statements from the business account and a CPA access letter or tax preparer access letter that says you're permitted to pull the funds out of a specific bank account for this purpose. 100% owner of the company, 100% access, and they're permitted to take funds out of the account without adversely affecting the day-to-day business. So you could use business account funds, IRA, 401k, the borrower's personal accounts, all sourced and seasoned 60 days with 2 months bank statements.
Okay. All right. Any more questions? I think we're. Okay. Yes.
Well,
go ahead, Mark.
Yes.
Go ahead.
So if there's no more questions, I just wanted to once again thank you all for attending. Let the Dscr loan give you access to realtors who haven't let you in their office. It's a great entry tool. It'll also give you access to across the nation in 30 to 35 plus states where if you haven't lent before, you could lend in a business purpose manner. Use business funds if you're the owner of the business. What else? It's no income, no employment, no employer on your 1003. 20% down debt servicing, 75% not debt servicing. You could be currently renting and do a debt service loan. All of these opportunities are available to you. Check with your account executive how your borrower will meet or fit into the program. Any more questions?
Okay. Well, and then thank you everybody for your questions. These were all really great. So quick reminder, we do these webinars every week, every Tuesday at 1. Over the next coming weeks, we've got ones coming up on profit and loss profit and loss loans, the foreign national program that Mark referenced a couple of times, bank statements for self-employed borrowers. And then we're going to do kind of a overview on correspondent lending if you guys are interested in getting into that. Oops, looks like we might have one last question. Fred, I can send you after this, there'll be a link to the recording of the webinar, so you can have access to that. We do have them, all of the past webinars are on our website. If you go in the main navigation under resources, there's a place called AD Learning Center. So you'll have all access to all the webinars that we've either done or that are coming up. And you can also do the enrollment as well from that location. There's a couple of other ways you can stay engaged with us through our social media. We've got varying places for Facebook, LinkedIn, YouTube. We also have the AD chat, news chat. And that's something you can download from both either Google Play or the Apple Store. And with that, we've come to the end of our formal presentation. Any last minute questions?
Okay. Thank you all for attending.
Okay. Thank you.